Hey guys, and welcome to the third weekly outlook of 2024. Today we're going to be covering everything that happened this week basically on ES, starting from the daily time frame, dropping down to the 1 hour time frame. Then we move over to all my executions on a 5-minute time frame. So stay tuned for that. We're going to skip Monday because it was a bank holiday. But if you want to watch all my live streams, so my Discord live streams that I share with my VIP members every day on Discord, right here, it's all inside the ICT Tape Reading 2024 playlist. Make sure to check that out. That's in the description box below. And before we get started, make sure to check out the wob.com shop in the description box below if you are interested in joining our Discord server and watching me trade and execute live on a daily basis. Then make sure to use the discount code VIP20 at checkout. So let's jump right into TradingView and take a look at the daily time frame. As you can see, the candle is still moving. That's because I'm recording this video on Friday. I'm going on a little vacation over to Spain this weekend, so I'm just pre-recording things. Here we're on the daily time frame. This week started really on Tuesday. We're not going to cover the bank holiday. So we had 1, 2, 3, 4 daily candles this week. And yeah, basically what happened here on the daily time frame is that after this little consolidation up here, we started to retrace into our daily bullish fair value gap right here. That's actually where we started to reverse. And now we managed to get above our 2023 high. This is the high of the monthly candle here from December. And right now we're still pushing further to the upside, possibly going to take out more weekly / monthly buy side liquidity. Continuing the move to the upside, like we said, in my weekly outlooks. You can also find them on my YouTube channel. And for my outlook 2024, I mentioned with all the Discord members that I want to see price attack the IBDA 20 range, retrace to the 50% level. If you don't know what I mean, that's our last 20-day IBDA range. We had a nice volume profile inefficiency right here paired with a bullish fair value gap on the daily. Nice sell side. We just took buy side. The year opened up right here on the 2nd of January. Immediately confirmed bearishness on the 1 hour time frame, and we've been short ever since, refilling this bullish fair value gap, and look how well we respected it. We basically filled in to the tick at the very low, and then we retraced to the upside, went sideways for a little bit on the daily time frame, and then this week we started to retrace, bounce off this inefficiency left behind right here, continuing further to the upside. So now after we reviewed what happened on the daily time frame, I want to drop down to the 5-minute time frame, which is my execution time frame. We're looking at the London kill zone here on Tuesday, the 16th of January, where we started our London tape reading session on Discord at 3 a.m., usually 10 minutes before that. So yeah, I can share all my charts and my thoughts before we see that London open. But immediately with the London open, we continued lower, taking out Friday's low right here. So we took out Friday's low. We're already below the bank holiday low. Asia actually trended. I usually not a fan of London sessions after we have seen Asia trending basically from the new day opening gap right here. We see that right here, new day opening gap. We filled it in. And from here on, even before the Asia kill zone started, we dropped significantly. Then we kept holding resistance here at the VWAP. London open came in. We left behind a unfilled volume imbalance, and I pointed that out in the chat that we always come back for them. So yeah, well, I had mixed feelings about this trade, but anyway, I took it first trading day of the new week. Usually I'm not very patient with my entries at that point in time, but we entered short right here. This is the low of the 15-minute bearish share value gap, overlapping nicely with the 5-minute bearish share value gap. Just going with the flow, looking for lower prices with a 5-point stop right here. Looking for sell side, I took off some partials right here, moving my stop loss to break even at that point. But I'm going to leave it up right here now around the VWAP. But really I looked for lower prices and a higher risk to reward based on the move right here. Now in hindsight, not really the highest quality trade. We're going to see better ones. Like for example the next one, once we hit that sell side liquidity, we immediately moved away from it, leaving behind one of our first fair value gaps since the London Open right here. All in here we just chopped. Really terrible price action. We had a set of equal highs here. This was also nice for a potential long. Right here, perfect equal highs, unfilled volume imbalance, at the low of the day. We just swept sell side. Now we start to leave behind a bullish inefficiency. I decided to take on the risk and go long right here. I also mentioned it to all the members on Discord that I'm going long here against my short. My short is already at break even. So if I'm right on this trade, I get stopped out at break even. If I'm wrong about this trade right here, this long, well, my short still continues and I can offset my losses. And with a CFD funding pips account, you can actually go long and short at the same time. All right, so yeah, we can see this trade played out very well. We hit our equal high buy side and eventually moved into this unfilled volume imbalance, retraced, continued higher, taking out some more buy side. I got out with a partial right here at equal high buy side, a partial at the unfilled volume imbalance. And I think this was about it. I already took a trade outside the London kill zone and I really didn't look for that entire reversal just yet. But the London session here on Tuesday really wasn't very spectacular. That long setup was a really nice one. I'm really glad I caught that. But I want to move over to Tuesday's YouTube live stream. We started the YouTube live stream like always at 9:15. I stream live on YouTube on Tuesdays and on Thursdays, starting at 9:15 a.m. We had 9:30, so this was the New York opening candle where we swept those two relative equal highs, and then we moved to the downside, taking out the sell side liquidity. And very similar in this YouTube live stream, by the way, if you want to watch that entire recording, seeing me execute this trade here live, well, the link for that is in the description box below. Very similar setup. We take sell side and we immediately move away from that. We also had a volume imbalance here, but if you see that, we actually filled that one in. We retested that previous candle's closing price. We kept holding support on this older bullish fair value gap that I have used for an entry once. I don't just blindly buy there. I wait for my confirmation. We took out the sell side liquidity, reversed back to the upside, and also note how we closed here. We closed above this bearish fair value gap, turning it into what? Yes, a inversion fair value gap. So now I have 1, 2, 3, and with that very next 5-minute candle, 4 confluences that lead me to believe that we're going to hold support here. Inversion fair value gap, bullish fair value gap. We just took sell side. We're moving away from that sell side with momentum. Usually that's not what you want to see if you look for that continuation to the downside. If it really wants to continue lower, it wouldn't leave behind a doji and a bullish, indirect bullish engulfing candle. So yeah, like I said, if you want to watch my thought process, the video is right here on YouTube with the link in the description box below. Entered long right here on this bullish inefficiency, overlapping nicely with that inversion fair value gap. We continued further to the upside, of course, securing partials right here once they are available. Also hit my take profit target very quickly. The final take profit target I also mentioned on the stream was this array of equal highs right here from the bank holiday during the New York session here. Basically we had 1, 2, 3. You see how many equal highs we had here. I put this little eye on here as a draw on liquidity, which was perfectly hit. And that is pretty much it for Tuesday already, after such a great trade during the live stream on YouTube. I mean, this is a 22-point move to the upside. I'm not really interested in the PM session anymore. Not feeling like I have to risk the profits I already made here. So let's continue over here with Tuesday. So we closed right here. Once again, Asia already trended, heading into the London kill zone. So knowing what we've already learned from Monday, or which has the refreshed memory of what happens if we have a trending Asia session prior to the London Open, well, already mentioned on Discord with the members that I'm not gonna be looking for much. So I was really patient before I took another trade. You can see that we hit Thursdays daily sell side liquidity right here. Once again, before the London Open, we hit that sell side liquidity. Let me actually fix that right here. That's Thursday sell side liquidity. first day sell side. We hit that sell side prior to the London Open right here. This is when I considered taking any trades. Didn't see any fair value gaps within this entire area. Didn't want to get chopped around. We saw a huge trend during Asia. Usually my sign to not even take a trade at all unless I see a pretty good opportunity. And that opportunity came around right with that new hourly candle. So we continued lower. The new hourly candle opened up and we took sell side one more time. We didn't manage to take out Tuesday's sell side right here. Just let me make sure that's actually Tuesday's sell side. Yep. Previous week, Tuesday's sell side liquidity. We didn't manage to take that out, but I saw a great confluence. We had SMT divergence here. I always sell my streams that I'm not using SMT divergence by itself as a entry reason. I want to see it's usually a confluence to an already existing setup. And yeah, in this scenario, we really moved away very quickly after we took sell side liquidity. I think you can see that common pattern within most of my trades. We took sell side liquidity, we move away, we had a little bearish fair value gap here and we close above that. I entered on the inversion fair value gap right here. Target, obviously, the set of equal highs. I really like equal highs as my target. And the final target was this little short-term high, moving into this bearish fair value gap right here. Like said, not really interested in much more. The majority of my position I secured after we reached 5 points, just because I don't want to get involved sitting here until 8:30 or the New York Open. Really wanted to get the cutoff at 5 a.m. because on the day before, I took a trade post-London kill zone. It didn't take long to take profit, so I was done by, well, I left the charts at 7 a.m. here really, leaving my stop loss at break even. So that was nice, but still, I'm not a fan of trading between the kill zones. I picked them for a specific reason. So didn't want to do that again on Wednesday. That's why, yeah, just looking for a low-hanging fruit target. Also because we already had a very big Asia session range. Continuing over to the early New York session, so right here at 8 a.m. After filling in some of these inefficiencies, we had a nice little internal YouTube model or 2022 mentorship setup. We form a higher high, higher low, and another higher high. Then right here at 8 a.m. with that new hourly candle, we shift market structure, leaving behind a bearish fair value gap. Well, that's the 2022 setup. Of course, I understand the reasoning that we didn't take out proper buy-side liquidity or a higher time frame point of interest. I didn't take this trade also because we had news. If I turn on the 2 degrees news indicator right here, we had news coming up at 8:30. I'm not at the charts at this point in time. I'm always waiting for that New York Open. So just sharing this here because this was a nice setup. I didn't take it. I was content with my profits from the London session, waiting for the New York Open. And as we can see, with the New York Open, before the New York Open 9:15, we managed to take out Tuesday's sell side liquidity that I wanted to see being hit already during London, which didn't happen. And from here on, we really had nothing else to target. We had a bunch of short-term lows here, and if we look at the bigger picture, from the low to the high, we can see now that price is within a discount. Looking at the daily time frame again here quickly. Where are we at? Let me skip over here to the most recent price action. We were right inside this daily bullish fair value gap. So I'm going to drag this out and leave it on the chart. Just interested to see where we're currently sitting at. Did we already take out this high? I think we did. So as I'm recording, this price is still moving and I'm still curious. As long as I'm in front of the charts. Yeah, we just touched it. Interesting. But anyway, we trace into this daily bullish fair value gap. If we bring it back down to the daily 5-minute time frame, where are we at? We were here on Wednesday and we started the New York session live stream. And I just want to point out, once again, that entire live stream recording happened only with our VIP members on Discord. So if you want to see me execute live on a daily basis, make sure to check out the bob.com link in the description box below. So at 9:30 right here, we hit our next short-term low already below the sell side in a discount from the higher time frame, right now inside our daily bullish fair value gap. And seeing this, those perfect closing prices and opening prices right here with the wicks to the downside, followed by, first of all, taking out a short-term low inside a higher time frame point of interest, moving away from that, leaving behind, even if it's just a tiny little bullish fair value gap, it was worth the risk to me. We entered. Actually, we did some scalping on the 1 minute time frame here inside that daily bullish fair value gap. You can see that on the live stream recording. But the main trade we took right here after the New York Open happened right here, retracing into actually a hourly bearish fair value gap. Let me make sure I cover that too. Where are we at? We're over here. So right here, we hit Tuesday's sell side. We left behind this hourly bearish fair value gap, and this is the long position we just talked about. So knowing this, we secured partials at the 50% level. Let's go back to current price action here on Wednesday. Secured partials at the 50% level right here on this long position. But, well, yeah, that I didn't secure 100% of it. I had the eyes off in swing trade and really wanted to see that continuation to the upside of the daily bullish fair value gap. So afterwards, we continued higher. I re-added to my position because, like I said, I was still anticipating higher prices here, adding on this bullish fair value gap as we retrace into it. Seeing all these equal highs we leave behind, I was pretty confident that we are going to take them. But eventually, this entire second long setup has been invalidated with this candle close here at 12 a.m. We closed below the bullish fair value gap. At this point in time, my short-term bias is switching bearish. It's as simple as that. And I actually managed, because I didn't secure good profits here on this long setup, because I guess you could say greedy. Yeah, you don't have to guess that. I was greedy at that time, wanting to see higher prices, even re-adding to the position on this bullish fair value gap. But once I saw the close below, I closed this entire long, so I'm not hedging anymore. And B, I entered the short right here of this bearish fair value gap, targeting the next short-term low, taking the majority of my profits right here at the 950 low. So we retrace very quickly after we hit our inefficiency, rejecting of the VWAP and the inversion fair value gap right here, back into our daily bullish fair value gap. And then here, before that 1 p.m. opening, we reverse. At this point in time, I was really not sure about my short bias, so I took off some risk here. I think I already secured some profits once we hit these short-term lows. I always do, especially if it's a trade outside my timing window. So I usually would have stopped at 11 a.m. right here. Like I said, I was a little bit greedy on Wednesday, so I didn't stop here. I wanted to see that continuation, and once that continuation failed, I switched my bias, my short-term bias, for the short continuation, taking profits. I mean, this is already a 10-point move once we hit the short-term low, and then it turned around on me. Never hit my entry point, but anyway, after this candle here at 1 p.m., a new hourly opening candle, I was pretty confident it's going to hit my stop loss, so I decided to close almost all of it. But on that very next candle here at 1:05 p.m. on Wednesday, we immediately engulfed that 1 p.m. bullish candle. That's when I decided to re-add to my position, because we still have sell side liquidity below and a short-term low to target. So even though I got spooked out here of my short position, I managed to get back on it once I saw that confirmation, and this was just a macro timing fake out for the continuation lower. And we can also see that with the volume imbalances right here, really fueled this entire move to the downside. Alright, but that's it already for Wednesday. After this short, sorry for opening this again. Let's get rid of that. So the short I called it a day and didn't watch out for anything during the PM session. But that's changing now as we continue over into Wednesday. On the daily time frame, just want to point this out, we have our daily bullish share value gap. And note, I hate that I'm always opening this. Every time I hit a key on my keyboard, it's popping up. But the main thing I wanted to talk about is that we closed above the daily bullish fair value gap. We didn't close below it, so we still respected it on a daily time frame. Everything that we see here was basically the wick of Wednesday's candle because we closed right above our inversion fair value gap here. And this time here on Thursday, we actually consolidated during Asia. And I really like that because that gives me more confidence for my London session setups. Started the London tape read like always, Thursday, 3 a.m. New York local time. At 2:45, we can already see that we're not bearish right now. We continue to take out more buy side. My target right here, always where that I is. I pointed that out with the VIP members in the tape reading chat that I'm going to target this equal high buy side. I had my drawn liquidity marked out. I looked for an opportunity to get in long. I looked for overlapping confluence if I have it ideally. We had a bullish fair value gap here and 2 inversion fair value gaps. And as we swept this short-term low right here, I entered my first long position. We continued up higher. That's where I secured partials, moving my stop loss to break even. Stopped out at break even. We took out the low. I added again to my position because now we have equal highs right here and still equal high buy side left that hasn't been taken, anticipating that turtle soup setup, internal fractal turtle soup setup, looking for higher prices, and that also very quickly played out. We saw the market structure shift or the change in the state of delivery already here from the Asia session low, continued lower, and then really showed no interest at all after retesting that daily bullish share value gap that we want to continue lower. How do I know that? Because we immediately closed above these 2 bearish share value gaps. Once we close above them, we use them as support to continue higher. Next bullish share value gap, we continue higher above the Asia session high. Holding that daily bullish share value gap with equal high buy side to target. I'm simply, in this case, looking for a bullish inefficiency to take a long trade into my drawn liquidity. Yes, we can see once we hit that, we consolidated. Then we got that pump up at 5:50 a.m. We've seen that today actually too on Friday, that post-London kill zone pumped to the upside. So if I would have kept on holding this trade, would have, could have, should have. We always say this as traders, especially if we look at our trades in hindsight. This would have paid off very well. Continuing into the early AM session right here on Thursday. Really wasn't, I also streamed that live on YouTube. If you want to watch the recording, I'm repeating this as often as I can because I'm talking about each session here in the recap. But, if you want to understand my entire thought process of why I entered the trades during the New York session, those are always recorded. All the other ones, I don't have the time for this weekly recap here to screenshot all the messages out of our Discord live chat where we do the tape reading with all our members. So please understand that. But if you want to know what actually ran through my mind after the New York Open, make sure to watch the Livestream recordings. Like I said, they're all here on my YouTube channel inside the ICT Tape Reading 2024 playlist. But let's take a look at the Thursday AM session. On ES, we really had a choppy New York session. Also on NQ, the main point right here was that we saw this expansion to the upside. And usually if we see expansion during London, the early AM session, the New York AM session, doesn't like to move most of the times. Let's say at least that the probability for the AM session to expand or rally or really reverse and go somewhere is much, much, much lower after a rally during London. Same way as we say that if we get a rally, a trend during Asia, the London session afterwards really isn't the best session to be trading. So as a rule of thumb, at least the probability for it is much lower. So heading into that, knowing that, we started the live stream on YouTube at 9:30. You can see that all we did so far was chopping around. The only difference that we saw between ES and NQ here, I remember that one, we had this inversion fair value gap here at 840. And once we closed above it, we actually continued to go higher on NQ, taking out that 830 high. So this inversion fair value gap set up after we formed a lower low, lower high, lower low, higher high. So even a little market structure shift in here. Played out on NQ, but ES really didn't like going anywhere. I think I jumped in a little trade right here, but I ended the AM session on the YouTube live stream at break even. Nothing really worth mentioning here, as all of this was chop. We can see that since 9:30 we didn't leave behind a single fair value gap, and then it's 10:55 we started to leave behind fair value gaps, retested the VWAP. I think I went short right here on this bearish fair value gap, but part of the position has been stopped out, but I always take off at least 50% of my risk once we close above the entry fair value gap. So if I set a limit order right here and the fair value gap immediately gets invalidated, I close the position and switch my bias, or I close 50% of my position, letting the rest run. Here I decided to close 50%, still having the hope that we're going to continue lower, but that didn't happen. At least I didn't take a full loss here. So that's my risk management system. The main point here though is that at this point in time, we took buy side once, twice, but we still failed to take out our 830 high right here on that, or yeah, right after that news candle. That's actually weird. We had the news candle and the candle afterwards left behind that huge wick. We still didn't take out the previous day's high, so I still saw the potential for that to be taken. Like said, NQ at this point in time has already cleared orders. Also on this day, if we go into replay mode, so before we saw this entire drop that I'm going to cover soon, using the ICT all-in-one indicator, you can display the regular trading hours opening gap. And this was really the interesting point about Thursday. So we saw this big range to the upside here. We know our daily bullish fair value gap is down here. What I like to do, especially during the New York session, is look at my entire daily range. So measured from the low of the day all the way to the high of the day to see where my PD array is at. My premium discount array. This is premium. This is discount. We can already see that during the early AM session, just after the 9:30 open, we retraced below the 50% and we bounced off here. We also had the VWAP here, consolidated around the VWAP, moving back into buy side, back down to the VWAP, back into buy side, but overall that SMT divergence really gave it away. And right now here, this purple box, this is actually our regular trading hours opening gap. And we saw it was a pretty big one and we haven't filled it in completely. We don't always have to fill it in completely, don't get me wrong. But paired with the SMT divergence, one of our members took a paper trade here. I think I took a small risk trade. I didn't stop after the AM session here. No, I actually did. I decided to stop here after we consolidated for all this time. I've still spent some time on the Discord, and that's actually where one of our members, Omar, I think, saw the opportunity right here. We closed below. We just took buy side liquidity. We have SMT divergence. We closed below the highest bullish fair value gap, leaving behind a volume imbalance. And on that very next candle, right here at 11:45, we leave behind this bearish fair value gap. So watch what happens. It's 10:50. We're inside our macro timing window. We fill in this entire bearish fair value gap paired with this inversion fair value gap. And on that very next candle, 11:50, 11:55, and now new hourly opening at 12 AM, continues to the downside. Immediately taking out all the longs, that were looking for higher prices because they have seen higher prices on NQ, waiting for this buy side to be hit. Well, that never happened. Those stops have been hit very quickly. So good job, Omar, for taking this trade. Let's get out of replay mode here and go back to Thursday. During the PM session, we saw something very interesting. Let the indicator here load up quickly. So after we filled in almost all of our regular trading hours opening gap right here, we just pointed that out. And after hitting sell side liquidity, we went sideways for a pretty long time. And that's actually when I started trading again. So I came back at 1 p.m. for the PM session. I saw that we've retraced almost to the low of the day. But then I saw something, very sketchy. Let me find it right here on the 1 minute time frame. We had this sell-off. We just hit sell side liquidity and our old bullish fair value gap right here. And then all we did was go sideways. I didn't engage anymore. Already understood that I missed the majority of the short. We have our daily bullish fair value gap here. And now we're going sideways. And with that first fair value gap right here, also if you watch the time right here, it's 13:27. And at 13:30, I entered the long. I also shared that on Discord. Inside the general chat, let me actually bring that up here. Let's open up the general chat. If we scroll up, let me fully zoom in here. This is a good cover of what it usually looks like if you join our London tape reading sessions. So this was my long right here. I didn't share that on Discord. I just traded the PM session by myself, targeting equal high buy side and this buy side right here of this bullish fair value gap with a relatively small stop loss, another set of equal highs, and usually, everyone that's watching me or has been watching me for a couple of weeks know my approach, going with the flow. I get in on that bullish fair value gap. If we close below, I'm immediately out of the trade. But we didn't continue to go lower, so I got in right here with the new 15-minute and 30-minute candle at 1:30 p.m. That's why I marked out specifically this time after going sideways after we just hit sell side liquidity. Continued to rally up very quickly. I secured my profits. And from here on, I already mentioned new high of day incoming. It was super obvious to me at this point in time. And then I mentioned, okay, close above this bearish fair value gap is the confirmation for the long. Right here, once we close above this bearish fair value gap here, the long is confirmed. And that's exactly what happened. We closed above the fair value gap. I got in on that new opening, knowing that the PM session is not here to consolidate. We've already done that during the AM session, trapping shorts into the market. And now the market is predominantly short. Market makers use that as an opportunity to quickly liquidate those traders and make good profits. They first of all have to lure us into one specific direction, short in this case, thinking, now that's going to be it. We have SMT divergence. We collapse during AM. We're only going to see continuation or drop during the PM session. But once we saw that close above this bearish fair value gap, now inversion fair value gap, well, it was confirmed to me. And then we actually continued higher, leaving behind bullish volume imbalances. They're always a giveaway that order flow is just super bullish and we're going to hit buy side right away. We continued higher and eventually hit our previous day's high target. Volume imbalance gave it away, closing above these inefficiencies, holding support, hitting buy side. So a massive rally during the PM session. Let me actually go back to TradingView on the 5-minute time frame. So I was really glad that I came back for the PM session. I usually do that if I'm not executing during the AM session after we had a massive London session trend to the upside, or if I'm just at break even. If I have the time in the evening, I tend to come back for the PM session to see if after a AM session consolidation, we get a nice reversal or expansion during the PM session. That's exactly what happened right here. All right, so now let's continue with Friday's price action. So now we're looking at Friday's London session, today's London session. I'm recording this on Friday. And once again, I hope you really see that similarity between the sessions. Asia consolidation. Very simple. We consolidate during Asia, and right here at 2:15 with that first 15-minute candle opening, or that second 15-minute candle. Now first 15-minute candle after we get the new hour, we immediately push to the upside, breaking above the previous day's high. Then we go sideways. At this point in time, we were on our tape reading channel right here on Discord. I can show that to you guys. If you're still watching this video, we're already at minute 35. So right here, that's where we always hang out during the London session. And this morning, let's see where we're at. Not going too long here, prefer not to be in at all, then going long around here. Minimum retracement that I want to see to consider longs is that 15-minute bullish fair value gap. That's exactly this one right here, this blue box. If we go back to our trading view, that's that 15-minute fair value gap I talk about. And we just swapped sell side liquidity here. That's where I added my first buy position on the Funding Pips account. And later on, after we moved away from this with some momentum, leaving behind a bullish fair value gap, plus leaving behind a volume imbalance right here, that's actually why I entered long on my Take Profit Trader account. I started this account this week. I can log into it right now. And we've been doing pretty well. It's sitting at 25,932. So I'm roughly $570 away from reaching that profit target. This is the execution that I took right here of this volume imbalance, just looking for the continuation into easy buy side, which was Monday's high. And what can we expect after sideways Asia movement? Expansion during London. But because Friday is usually not the day where I look forward to make huge amounts of profit, Fridays are usually for me just trading days where I like to keep it small and not risk as much, because I really don't want to carry. I don't want to enter the weekend in a bad mood, because I just gave away all the profits that I made through the entire working week, carrying over that emotional baggage into the new week. Monday starting out right away with the main goal to get rid of the drawdown that I've created on Friday. That's not how I want to start a new week. That's why I usually play it small on Fridays. So just a little scalp here to the upside. You can see that once again during the entire gap time between London and New York, we continued to the upside. Then we started the live stream on Discord today. This was actually a very good one. I just uploaded the recording right here. Before we started with the New York session, I pointed out first push, second push, third push, and a fourth push, trapping longs into the market. If we invert our scale, after this displacement, what would you do? We just hit a higher time frame point of interest. We have plenty of buy side left behind. Lower high, lower high, lower high, relative equal highs, and a unfilled inefficiency on a 15-minute time frame that we already used during London for our long right here. Well, we got our market structure shift. It's 9:10 a.m. We start the live stream every day at 9:15 a.m. on Discord, leaving behind a nice bearish fair value gap. We entered short right here, or I think Simo catched it too, and a few others. You didn't have enough time here. Well, I don't want to say not enough time, but it was more risky because we had the New York Open and news coming up at 10 a.m. I'm usually not the biggest fan of entering prior to the New York Open, but that's because I don't have enough room with the trading drawdown that you have with a futures funding firm here to take the short prior to the New York Open. So I only took it on my Funding Pips account, the resort, and all of that has been shared on Discord. I actually took this trade and also on Twitter, if you don't follow me there. retracing very quickly into this 15-minute bullish fair value gap where we already used as support. And at this point in time, I already called it a stream because we moved big time during London. We already hit all the stops during New York. Usually what we see for the remainder of the AM session is chop. And until 11 AM, all we did was, well, retracing into our old bearish fair value gap that we used as an entry. Before I ended the stream, I mentioned that my go-to plan would be, well, if we're going to continue higher, I want to see a close above our initial entry short bearish fair value gap. And if we see that, I want to see that being used as support, as a potential inversion fair value gap for the continuation into our December buy side liquidity. Because at this point in time, right here with that last pump to the upside, we still didn't take out that 2023 high, December buy side. We left that behind. We missed that by one tick here on ES. So we retraced into a discount. This is our regular trading hours opening gap. We hit the 50%, hit our previous day's high. We're below the VWAP, retraced, like I said before. What I like to do is draw up our PD array. Took sell side below the 50%, holding support on a bullish fair value gap. We're moving away from that, back above the VWAP, closing above our bearish fair value gap right here, similar to what we did during the PM session, closing above the fair value gap. Just looking for that continuation rally. But today I did not have enough time to jump in on during the PM session. But as you can see, once we close above it, we hold support. Continue to push through those two bearish fair value gaps, even confirming the long more. So if you want to wait for confirmation, one of those two inversion fair value gaps would have been your entry. You would have even gotten a second chance to get in on this inversion fair value gap after it has been confirmed. Right here with this wick, and from here on, we very quickly continue to push to the upside at 12:30, holding support on every bullish inefficiency we left behind, continuing further and further even. So that's where we are at right now. This is our, if we go back to the daily time frame and wrap it up, let me zoom out here. This is our buy side of the 29th of March. We've hit that now. We even expanded above it. This would be, of course, you're going to watch this on Saturday or Sunday. The perfect opportunity for a thank God it's Friday setup during the PM session on the weekly candle. We're currently at the high of the week. Eventually, we're going to leave behind a wick, and that always offers the opportunity for a thank God it's Friday setup. All we've did right here is barcoding to the upside. We barely saw any down closing candles here. If we did, they always end up holding support on a bullish fair value gap. Eventually, we're going to see that retracement, leaving behind the wick on a weekly time frame, which essentially is the thank God it's Friday setup. So now we're coming to the end of this weekly recap / 2024 mentorship. And I just want to point out that if you don't follow me on Twitter yet, make sure you do, because sometimes, if I feel like it, I also share the analysis that I share with my VIP members here on Twitter. So right here, before we saw this entire move to the upside into the 2023 high, previous week's high, and the March highs, I was looking at this daily bullish fair value gap, sell side and discount, pointing out this bearish fair value gap. And as we click through the tweet or the post I made here, I was looking for a close above this bearish fair value gap as confirmation. We already saw a potential market structure shift after forming a lower low, lower high, lower low, lower high, and a lower low. Now we're shifting structure, starting to hold support on bullish inefficiencies that we leave behind. If we now start to invalidate bearish inefficiencies like this fair value gap and hold support on them, well, that's usually when we can call it a confirmed change in the state of delivery. And that's exactly what happened here. You can see I shared that on Discord with the VIP members. Heading over here into TradingView. That's how it played out. We closed above this bearish fair value gap. I don't have it on the chart right here. We closed above, continue higher on that same day. That was Thursday, where we had that London session pump. The 8:30 unemployment claims news come in, and we retrace, filling our regular trading hours opening gap into our old bearish fair value gap, closing above, used as support, paired with a bullish fair value gap, PM session continuation to the upside. That's how you can really leverage your multi-time frame analysis here. Continuing that push on that same day all the way into the SPY side liquidity, where we had Monday's inversion fair value gap right here. We used to hold resistance here. Once we close below, bullish fair value gap, close below, we use it as resistance 1, 2, 3 times, consolidated in it. And from here on, we continued further to the upside on Friday, retesting that inversion fair value gap, which, if we go to the lower time frame, was exactly right here. So seeing a bounce off this area coming from the higher time frame, knowing that we filled at least 50% of our regular trading hours opening gap, and then seeing that last confirmation. All right, we're also close above this old bearish fair value gap, again using it as support to continue into buy side. This would have been a higher probability confirmed entry to go long. So overall, I'm very happy with the decisions we made this week in terms of risk management, in terms of the analysis that I shared with the members. We had great live streams this week, ending this week in profit on my Take Profit Trader account that I just started this week, only $600 away from actually passing it. And because I have a really cool promotion right now, I don't have to pay the activation fee. If you want to check out that promotion, the link for that is in the description box below. 40% discount plus no activation fee. And on my Funding Pips accounts, I did very well as well. Up, I think, 2% today, this week on my 50K challenge. You can see barely any drawdown. My risk management style is very unique and hard to teach. So if you want to learn more about that, check out our live streams. You can either watch the recordings or join us on Discord. There's currently a 20% discount on the VIP memberships. So yeah, please apologize. My apology here for this video being maybe a little bit rushed. I don't know how you feel about it, but I'm leaving on a vacation tomorrow. It's the middle of the night right now recording this video, so you guys can watch it over the weekend. I will be back for a new live stream on Tuesday. I'm gonna stay until Monday in Spain. My return flight back home is on Monday night, so I won't be here on Monday, but I know you guys are well prepared. So yeah, thanks very much for watching this video to the end. I would really appreciate if you give this video a like and subscribe to my YouTube channel. Take care and enjoy your weekend. I certainly will over in Spain. It's lovely weather over there. So yeah, guys, thanks very much for supporting me. I will be back next week. Take care.